Okay, so we've heard a lot over the last 2 days about the consequences of the war in Europe and the new conflict in the Middle East. We've heard about the rise of AI and many other issues that are really changing the outlook for the energy world. So now we're actually going to talk about how does that affect the sort of investable world for fuels. Where are those investments going? Where are the opportunities? Traditional fuels, alternative fuels, where's the space going? And we have a great panel today to have that discussion. Meg Gentle is Executive Director of the Board of HIF Global, which is a major player in the advanced fuels space. Julian Milcreast is Executive Vice Chairman, Bank of America, and a long, well-respected player in the space of finance in this area. And then we're honored to have Francesco Corvaro, who is the Special Envoy for Climate Change with the Italian Republic. And I think, part of our challenge here is to think through how governments and the private sector are going to respond to today's challenges, knowing that a third of the global naphtha production needs to exit the Strait of Hormuz. We've got 16% of jet fuel was previously going through that route, 10% of marine fuels, over 3.5 million barrels a day of refining capacity in the Gulf area were hit in the early days of the war. And there's still 1 or 2 million barrels a day still offline. And we still have a very uncertain outlook for LNG, which we've talked about. So it's kind of a cloudy picture, what it's going to look like going forward. Are investors going to flock to drop-in fuels? Does it matter which geography you're in? And so we're going to have a discussion about that. And to start our discussion, I'm going to start with you, Meg, because your firm is a big player in the advanced fuel space. And of course, you bring to the table a long experience on LNG markets. So has the closure of Strait of Hormuz impacted biofuels markets? And does that change the outlook for e-fuels investment? Is SAF now not a marginal thing? Are people going to really look at it? We're talking about sustainable marine fuel, waste to value. How has the outlook really changed, do you think?
Yeah, I think definitely the closure of the Strait of Hormuz have had an impact. And, we've seen sort of an evolution of first focusing on sustainability that supported some of the initial markets for sustainable fuels. Over the last couple years, that's really moved to focus on affordability. That hurt the market for sustainable fuels and slowed it a little bit. And then Hormuz has definitely refocused the entire world on energy security and diversity of supply. So when we take together the Ukraine war, closure of the Strait, and need to provide new energy to build out data centers, we know that we have to supply new energy from every single source possible. And when we think about biofuels, e-fuels, and we produce e-fuels today in southern Chile, but still very small volumes. But combined, biofuels and e-fuels are 3.5, approaching 4 million barrels a day of crude oil equivalent. And those flows have not been impacted by the straits, and neither have their pricing. So if we could double that, that provides a fantastic relief valve for, I think, what we are all facing and all governments are considering. How do we live a life going forward without the straits being such a choke point?
So Julian, help us contextualize that. It's really kind of an interesting question. We've got increased demand for cooling worldwide. We have the AI loads, which we've all been talking about. We can see that driving investment dollars, but everybody's debating. Money going to go back to traditional fuels? Does it mean this boost now, it's easier to fund alternative fuels? Or is it both? How do you see it?
Yeah, look, I think we're in an interesting period now because you've got a sort of really strong period of probably 3-4 years in my mind where you're going to see really strong fossil margins. But that is going to just reinforce not just what you just talked about, Meg, in terms of security of supply and what am I doing in my own country, but also back to the affordability kind of point again. So I think those two engines are going to switch back on over the next period of time. But the flip side of all that, I think, is you also, there's a question is, are governments going to be able to afford to keep the mandates and drive things in a more difficult kind of world than what are relative kind of priorities, right? So that's kind of the conundrum. And I think two things which I would take, as I agree with your comment around AI and cooling and everything else, and your comment around, look, you need everything, right? The interesting piece, I think, is our government's going to still feel they need to make space to encourage future fuels. If they can't do it with a mandate, the other interesting thing, I think, when it comes to your AI point, we see a huge amount of potential repurposing of AI that's been focused on biotechnology for pharma and drugs and other things, and actually repurposing that to actually find out what the right answer is in terms of feedstocks and fuels. So I think there are ways governments could encourage things without necessarily being a big mandate, but by encouraging development of that next generation of technology in the space. And the other thing I think is, if you look at the big corporates that already exist in the space, if you already got an existing fossil or biofuel business, you're in a great place. But are you going to redeploy that capital off your balance sheet, where it's much easier for us as a bank to deploy money in support of you, as opposed to trying to structure that next kind of project finance deal, which is much more complicated.
So I mean, do you expect more people to come to you for alternative fuels? Countries are going to want to have non-imported fuels. So
I think we're going to get that question from companies like Meg's and others saying, how do we make this happen? Because this should be a real window. And I think that comes down to technology cost and maybe a corporate finance rather than a project finance solution to it. But yeah, look, I think it's going to should be a priority for governments, and it should be a priority for us as banks to work out how do we get creative with the financing structures to make it kind of work right, and work with whether that's, as I say, partnerships on the technology side or otherwise to really make things happen.
Right. So Francesco, I mean, advanced biofuels seems like it's going to play a big role, especially drop-in fuels. It's going to be suddenly I can extend my fuel system by having these drop-in fuels. We've seen that. I've done a lot of work with the state of California that's done a lot to reduce the carbon footprint of California, which has a low carbon regulation for fuels. So, and then of course, waste to energy has a big potential because it's a twofer. Right? I'm not only getting extra fuels, but I'm handling a problem that has become an increasing problem, especially in the global south, of how to reduce waste. So how are you seeing the policies that you think are needed to facilitate that? And what do you think is the best way to tap the potential?
So first of all, thanks for inviting me, and it's a great pleasure. I would like to start for answering this question from the title of this panel, The Future of Fuel. I believe that it's better to speak about the present of the fuel. You describe very well the crisis that we have right now. And during this amazing event, I had the opportunity to hear a lot of time speaking about new important technologies like fusion, small modular reactor, hydrogen, what you want. But from the political point of view, it is important to remember that we need time to perform these new technologies. We need to earn time with technologies that we have with low carbon footprint. For this reason, focus the attention on e-fuel, biofuel, alternative fuel. These fuels are not just part of the transition, but in my opinion is a bridge. a bridge between the energy that we have now with the energy that we can find in the future. So it is really important, and Italy is working a lot on this to promote the possibility to include this fuel in the energy transition system. Italy is not against anything, not against EV. We are not in this position, but we believe that we need to include all the technologies that we have, particularly if we want also to achieve the target connected with the climate. And it's crucial this right now. Otherwise, the idea is that we are focusing on a future, but we don't know how we can reach this future with these new technologies. And the fuel, biofuel, are sure an important part of this. Also, because thanks to this, we have the opportunity to save some industrial compartments and moreover, to support some specific sectors where the new technology can be an issue to enter. Think about aviation. Think about shipping. So we need to be very careful right now, particularly at the political level, to avoid to decide a transition throughout a law. It's not possible to oblige a transition throughout a law. We need to follow the technologies. And now this is one of the best technologies that we have.
So, I mean, I think the interesting opportunity for the immediate term, because we have an immediate supply shortage, is really like the popularity of what we call drop-in fuels. So even as I go to the transition, you know, fuels where I have to build out a whole new infrastructure system, that takes a lot of time. But we have a lot of fuels that can really complement and use the existing infrastructure, right? So that I know is part of the debate in Italy, because EVs require new infrastructure, but some of these drop-in fuels, you know, you can use right away. When I was in California, you know, biodiesel, of course, really took off, but I worked a lot for the state looking at renewable natural gas. You know, we have a lot of landfill gas, and they had a lot of agricultural waste that could produce gas in California. That wound up being a really investable pathway in California. So, but Julian, you and I have talked about offline this problem about what's good enough, right? When I'm talking about rulemaking or giving incentives, you know, there's this problem, and we had that problem in California. You know, what is considered a good enough drop-in fuel? How do we define that?
Yeah, look, I think ultimately what you need is to scale the markets, right? And so if you can scale the market with something that is 3/4 of perfect, but it enables the market to grow and get to scale, and ultimately perfect comes because it's financeable off the back of it, I think that's a good thing, right? So I do think the bar has been set too high. And maybe another way of putting it is you can set that bar that high if you're going to put aggressive mandates to make it happen.
Right.
But the minute you start to give less visibility on that mandate and the duration of that mandate, you've got to then say, well, okay, there's another way I need to work this. If I'm not going to drive it that way, I need to try and let the market kind of move, right? And we're going to come back to hydrogen later, but it's a good example for me as well. It's like, look, ultimately, is whatever color of hydrogen it is, I think it's a good thing if it's driving the market, right? And ultimately, you're then going to get to a place where you can drive green hydrogen ultimately. So,
Professor, what do you think?
So what I am thinking is from the political aspect, in my opinion, a good decision must have at the same time different perspective. For sure, it is important to remember the energy security, energy resilience right now, but particularly for this reason, it is important to recognize the moment that we are living. And right now we have to focus the attention on this. To give you an example of this, during COP30 in Belém, in Brazil, Italy decided to launch an initiative to increase the biofuel production. For which reason? Because if we want to be aligned with the climate, with energy security, with a lot of really ambitious targets, we need to have an approach with a neutral technology. It is not possible to avoid this. I am speaking right now not as special envoy, but as a scientist, as a university professor. The idea behind the Italian government is to follow a scientific approach to the energy transition. It's something that is not possible to stop, but it's something that we need to guide with the technologies and the possibility that we have right now on the market, to have time to improve the other technologies for the future. But we need to remember that we need to reach this future.
So I think it's interesting, Megan, looking at your work and your career, we know that China has been forward-leaning in a lot of areas. I mean, they're a big shipbuilder, for example, and they've been leaning forwardly on sustainable marine fuels, which, one could argue maybe they're going to set the market because they're such a big part of the global economy and such a big part of owning ports and such a big part of the shipbuilding industry. What do you think? You think they're going to be setting the pace on what solutions stick commercially?
So when we look at the market today, I would say that China is definitely leading. And so why? Why is that? They did not embark on all of these sustainable fuels in order to be leading on environment. They're trying to lead on diversity of supply so that they can wean themselves off of dependence on the rest of the world for fossil fuels. So this is a supply security strategy on the part of China. And so then what are they doing to make that happen? They are enabling very large scale deployment of capital very quickly. And this is what we're competing with. So the model that they're putting into the market is, government-backed guarantees for CapEx that enables construction very fast and then sale of volume without any long-term contracts. So there's no need for the external traditional bank financing. And this is also sets the price fairly low. When we try to compete with China on methanol, which e-methanol or biomethanol can be used by the maritime sector very quickly. Over 400 ships, I think, now been ordered to consume methanol. We know that we can produce methanol for between $1,000 and $1,200 a ton, but China is lifting cargoes every day, one cargo at a time, at $800 a ton FOB Shanghai. So we've got a price competition and a time of contracting competition. So are they leading the market right now? Absolutely yes. Can they set that as the commercial model for the world? Very challenging for the rest of the world to do that in that kind of capital deployment. So we really have to think about, okay, are we playing the same game on deploying capital where we have to essentially do things on balance sheet? And this is a big challenge for the rest of the world to come in. There, I think, are 1,000 projects in the world for sustainable fuels. About 25% of those are in China. But when you look at projects getting to FID to start construction, over half of them are in China.
Julian, you have a comment on that? I mean we need to do something with you, innovative structures from the banking sector?
We'll take money from Julian any day.
Thank you. Be a pleasure. No, look, I think you put your finger on it, because that is the conundrum, right? Because you either need, back to what I said earlier, you either need governments to drive things with the mandate, which gives visibility, right? Or you've got to take costs down so they just work economically. And that's both the kind of chicken and egg kind of issue.
Right, exactly.
So I think the bit, I mean, if you look at who's making a lot of money today, right, out of the current market, you look in Europe and you say, well, you've got Neste, you've got the Varo Prem business, who did the Prem acquisition, which we held them on last year. I mean, but the model take that Varo Prem situation, you've got two engines. You've got a fossil engine and you've got a bio engine, right? And you can decide how you switch one off and on, and you can use one to finance the other, right?
Right.
So it's Meg's comment around can you do things more on a sort of on the balance sheet, but what you need then is big companies to own this space and be able to deploy the capital, as opposed to all being startups and smaller companies. And that I think is the real conundrum. So China has stepped in, as you've described, but you either need governments to step in or corporates who care about the ultimate game stepping in. And that's, I guess, my other kind of challenge or question in your opening remarks is, look, if you're a big airline company, right, why wouldn't you be putting 25, 50 million of your money into and grouping together with others and putting that in a fund to drive SAF and make things happen, right? You know, you look at where things are in terms of margins today, that's not where BP and Shell thought things were going to be when they switched off their big plants and developments, right? Now, if we were asked to project finance those, not so straightforward. If a BP or Shell said to us, look, Julian, would you write us a 500 million bilateral, and one of the things we're going to be spending on is doing this, that's a much quicker and easier conversation, which deals with your speed to market point, Meg, as well, versus China. So it's not an answer, but it's I slightly put it as a challenge, either to governments on mandates or funding technology to drive costs down, big corporates to use their balance sheets, or big users to say, look, this is strategically important, and I should be particularly alive to that if I'm seeing jet fuel and prices in Singapore at sort of north of $200 on the current physical delivery. That should drive some long-term investment.
So, you know, it's just an anecdotal story, because, you know, working a lot on this topic, especially drop-in fuels and those fuels. In California, there was a group that decided that renewable natural gas, RFG, was going to be commercial, especially given the regulations in California. So independent group comes in, makes a SPAC, so different kind of financing structure, makes a SPAC, puts some RFG companies in it, and was very successful. And they sold that company to one of the majors for $1.4 billion. That company that organized the SPAC's profit on that transaction was something like $780 million, right? So for the organizer, turned out to be highly profitable, and it put the major into a business that's actually growing in the United States. So it was kind of like an interesting example where somebody came in and came up with a different kind of structure to have the market help them along. And, but it did wind up with the majors. And, you know, interesting statistic, because I did a whole thing where we pinned down all the different deal making from 2005 through 2024. And the majors, and I include like Valero and Phillips 66, some of the big refiners, actually invested $56 billion in deal making in clean tech and alternative fuels, which is a big amount of money when you compare it to the big clean tech players like Energy Partners, Clean Energy Partners, and SOSV, and those players. They spent about 80 or 90 billion dollars over the same period. So that's more, but it's not that, the gap is not the majors spent 10 billion and, you know, clean tech companies spent 150 billion. I mean, the gap was a lot smaller than I think what people perceive to be out there. So, you know, kind of an interesting thing. And what we found was that, and that's the interesting moment now, that everything was pro-cyclical to oil prices. In other words, when oil prices were going up and governments were intervening on climate or on energy security because of an oil shock, more investment went into clean tech.
For sure, what is important that you are saying in some way to have a framework, a regulations that must be clear. This is important also for bank. If we want to invest money, it is important to give a precise perspective for now and for the future. This is crucial. Without this, it's not possible to involve the private sector in this kind of discussion. And I would like also to underline an aspect, particularly after this second crisis in the Middle East, I started to recognize a different perspective in the common people. I have my neighbors, and if I speak with them, it is clear that in this moment they are feeling a dangerous situation connected with the energy. It's the first time for me that I had the opportunity to have this feeling. I want only to give you a number, but really it's only a number. In last month, in May, in Italy, we registered an increase of selling of AV vehicle plus 96% in comparison to the same month of the last year. Totally remain a small part, for sure, but it's a signal. It's a signal of a sort of new feelings in common people. For this reason, it is important to give answers from the political level with clear framework, with clear regulation, particularly including the biofuel aspect, the e-fuel, the sustainable fuel, in a sort of new life cycle evaluation, because we need to remember that we are speaking about sustainable fuel. We need to avoid conflict with food production and so on. So it's a bit tricky, but I believe that in this moment we can have important opportunities for the future.
Can I just add something? Because I think what you're saying is really interesting, but it's a question of how do we capitalize on it, right? Because if I look at the next 3 to 5 years, are going to make a lot of money for people in their existing kind of positions. And you'll have the reaction you're describing from the man on the street, right? You look at what's going to happen, you're going to be in a very different place as what people want, and therefore I think in 2035. The question is, what are we going to do? And that's a question to governments, stakeholders, everyone, and banks and so on.
Well, what we do today is going to impact where we are in 2035.
Exactly. It's like how do you bridge that, right? And then are you going to do enough? And that's the challenge, I think, where it's to governments or to the folks and stakeholders in all parts of the industry, right? So it's not an answer, but it's a challenge.
So we only have a couple minutes left, and I would feel remiss if I don't ask the panel quickly to tell me what are your views on hydrogen? You know, did we miss the window again? Is hydrogen going to be big in Chile or maybe India, green hydrogen, but not elsewhere? I mean, what do you think the outlook is? Meg, let's start with you.
Well, when we say hydrogen, I struggle with this a little bit because there was a lot of expectation given to the world that we can just convert everything to hydrogen and we're going to have lots of hydrogen. But we sort of ignored some facts about hydrogen. It's the smallest molecule on the table. It leaks from a lot of places. It has to be chilled to absolute zero and kept at negative 400 degrees Fahrenheit in order to transport it long distances. So there are a lot of constraints with hydrogen. What we decided to do is to attach the hydrogen molecule to a molecule of carbon dioxide. Then you have hydrocarbon, the same thing that we use today in all of our existing, energy infrastructure, and can be transported at ambient temperature as a liquid. And so when we say, okay, well, what do we think about hydrogen? I'm not optimistic about the hydrogen market as this massive interconnected worldwide market. And I think that's now becoming clear. I am optimistic that hydrogen can be a component of e-fuels, which are the drop-in fuels that you talk about, that can be easily blended. So when we make e-gasoline chemically the same as gasoline, we just blend it into the gasoline. We make jet fuel same way. It can just get blended into the jet fuel stream. And so we can use the existing infrastructure that we have, like Francesco was talking about, and actually be able to turn over our energy systems in a cleaner way.
Julian?
Look, I think the e-fuels piece and blending, that's the way to start to get things kind of moving, for sure. But I think we've gone from, I think we had a hydrogen event that we did at Bank of America about 4 or 5 years ago, Equity Research Conference. It was probably our most well-attended event at the time. And equally, I then now look now and I think, look, we're not really seeing this moving at the pace that we expected, and it's a much more medium-term thing. That said, I come back to my comment earlier, which is I still think Well, the biggest challenge at the moment is if you say it's got to be green, there's just so many demands on electricity given, what's going to happen in terms of cooling, let alone heating and AI and everything else. You've got to say, well, if you're going to make a move, you've got to start to say, let's build some hubs in places where they could do blue hydrogen, put the carbon capture behind that to get that as a first kind of piece, and then see what happens. Otherwise, it's going to be very kind of constrained because of the lack of infrastructure. So.
In 30 seconds is a challenge to answer. The issue that I have with hydrogen particularly is called the second law of thermodynamics. I don't have time to explain clearly right now, but believe me, that is an important issue. Hydrogen will have a part in the transition for sure, particularly in some application with the technologies that we have now. But we need to be very careful. When in Europe I heard a lot speaking about hydrogen, I call to my student hydrogen as the Vanity Fair of the moment. We need to be careful about hydrogen. We will have a part with hydrogen, but we need to remember that we have some law connected with the physics that we are not able to neglect.
Okay, well, I want to thank the panel for a very interesting discussion. Look forward to hearing more about the topic at the Atlantic Council and beyond. Thank you very much.
Thanks for having us.